Hello and what is going on, lovely people of the internet? It's Hoop Money here with another video for you guys today. Today we're going to be going over the top 5 stocks to buy right now for long-term sustainable growth in your portfolio. These are the type of stocks that you can buy and just look back in 5 years from now, not even have to follow the stock market at all, and you will see some good growth. Now, putting all the financials to the side, the way I like to find these companies is actually different than examining financial statements like we have done in our previous videos that you guys should check out. I like to look for stocks that I personally know, I personally use, and I think will be around in 5, 10, 15 years from now. So we will be explaining all of this in the video today. All the stocks I look at are companies that have been around and will be around in the future, so that's why I like these companies mostly, but we'll also take a look at some of their financials. So that all being said, I'm not a financial advisor. This is not financial advice, but I have 2 degrees in finance and I invest in each of these stocks personally, so it's up to you if you want to listen to me or not. If you're new to this channel and you'd like to see more content like this in the future, make sure you subscribe to the channel and turn on post notifications. But the number one thing you can do for me is to actually like the video. Liking the video, it helps spread my content to other people on the internet who have similar financial goals, so it's always good if you guys can just like the video. So without further ado, we're going to get right into the top 5 stocks to invest in for the long term. Alright, we are back, ladies and gentlemen, and here we are on finviz.com that we use in almost every video. I love this website. It has everything. It's great for beginners. It even gives you a technical analysis for you, so you don't have to do any of that yourself. So I highly recommend this website, and let's get into it. So the first one we were going to go over is VU, and this is actually an S&P 500 index fund. This fund is the best because it has the lowest fees to invest in. So there's other funds like SPY that you can invest in, but that actually has higher fees, and that's actually true with all of Vanguard. So Vanguard's actually really good, and it's one of the best exchange traded funds because they charge the lowest fees. So as you can see from this chart, SPY has been trading in this little channel right here, but if you are going to invest in this for the long term, it is not important to know what time is the best to buy. You do not have to buy this dip specifically. You do not have to sell when it hits this pink level. The best way you can invest in the long term is to consistently invest. So every paycheck, maybe set aside 100, 200, whatever you're comfortable investing, and then you just put it right into VU and you can get consistent returns over the long term. VU also pays a 1.5% dividend right now, which is also pretty good, and you can turn on dividend reinvestment, and that will reinvest your gains back into SPY, which a lot of people do when they're investing in the long term. You set it and forget about it. And then an even better way to invest in VU is to open a Roth IRA, and then those gains, when you take them out in retirement, so you'll have to be 60 years old to withdraw those funds, and when you do withdraw those funds, it's actually going to be tax-free, which saves you a bunch of money when investing in a fund like VU. So a metric we're going to be going over in this video to quantify risk is beta. So with VU, the beta is actually 1 because the beta is a measure of market volatility, and since VU is the market, it actually has a beta of 1. So we are going to be going over the least risky to the most risky, and with VU being a diversified stock, I think it is the least risky. Even though it has a beta of 1, we are going to be going over a stock with actually a lower beta than 1. But since this is diversified, since it quantifies the whole S&P 500, I think is the least risky. The next stock we are going to be going over is ABBV. So ABBV is actually the makers of Botox, and they are a great company. They are in the healthcare and drug manufacturing sector of the market, and they pay a nice dividend. As you can see, their dividend percentage is actually 4.72%. So if you invest $100, you'll be getting $4.72 back every time they pay a dividend. Then we're going to take a look at beta right here. That means it moves on average 0.8 times the market. So if the market goes up $100, this will go up $80. Now you might ask, why would I invest in this instead of investing in the whole entire market, and that's because the stock pays a dividend, and it is a dividend aristocrat. A dividend aristocrat is a company that consecutively for 25 years has increased their dividend. So I love this stock. It's a really safe stock to have in your long-term portfolio. Warren Buffett recently invested in it, so I highly recommend you put ABBV on your watch list. The next 3 stocks I'm going to go over are a bit more risky, but I still believe they're going to be here in 5, 10, 15 years, so I still think they're good long-term investments. So we're going to go over Apple first, and Apple is in the technology and consumer electronics sector. We all know Apple. We all have iPhones, unless you're the weirdo who has an Android. I'm just kidding. Android users are accepted at this channel. But as you can see from this technical analysis right now, it's actually a decent point to buy Apple since it's trading at the bottom of this channel. So like the other stocks, we're going to go over the dividend and the beta. So you can see the dividend is only 0.82, and that's because Apple is, although it is a giant company, it is still a growing company, and with technology companies, they're always trying to grow, so they always try to reinvest as much of their money as possible. So that's why they have a lower dividend than ABBV. And then for the same reasons they have a lower dividend than ABBV, they also have a higher beta, which means they are 1.23 times more volatile than the overall market. So with both of these metrics, we can determine that Apple actually has a higher chance of growth, which means they have a higher chance of appreciating in price than the other 2 stocks we have gone over so far. The 4th stock we're going to go over is actually a crowd favorite, and that is Tesla. Led by the cult leader Elon Musk himself pumping Dogecoin on Twitter, we have Tesla stock, which is a consumer cyclical auto manufacturers. So I actually don't agree with this classification. I don't believe Tesla is a cyclical stock at all. I think it's more of a technology company because they're not only doing cars, they're doing clean energy as well. They're revolutionizing the power grid. And I think that's actually more of an advantage to this stock than a normal car company, is that they are a technology company and they're going to take over and dominate more than just the auto manufacturing sector. And that is also something that a lot of auto manufacturer analysts leave out of their analysis because they're trained to give valuations on car companies rather than technology companies. So of course they're going to have this valuation a lot lower because they aren't taking into consideration all the things Tesla is doing outside of just producing vehicles. Now Tesla does not pay a dividend and they are barely profitable right now, so that is why we are classifying this as the 4th most risky stock on this list. But I do think Tesla's going to be around in 10 to 15 years, so that's why I included this on the list. And then we can take a quick look at their multiples right here. They have a PE ratio of 1100, which is pretty insane for a stock, but this also signals that they are in the early stages of their growth, and in the future they will be a lot bigger of a company, but a lot of that is already priced into their share price, so that is something to look out for. And then we'll take a look at their beta, which is a 2.03, which is the measure of volatility, so it's 2.03 times more volatile than the S&P 500, so Tesla is definitely a riskier stock than most. And that brings us to our last stock to buy right now, and that is Square. So if you don't know Square, it is a technology software. It's actually a fintech company, and it's the creators of Cash App and also those tablets that you use to make purchases at maybe food trucks. Some restaurants even use them. So what I really like about Square is it has the same CEO as the CEO of Twitter. So if you guys know who Jack Dorsey is, he's a very young and very innovative guy. So what Square's doing in the fintech industry is super disruptive, and that's why I like them even more than a stock like PayPal, because I think they have more opportunity for growth. But this stock is very risky and a lot of it is priced in, so that's why it is the 5th most riskiest stock on this list, but I still like it for the long term. As you can see, they do not pay a dividend, and like Tesla, that is very common for high growth companies. And then we'll take a look over here. We look at the beta. It's 2.46, so it's 2.5 times more risky than the S&P 500. And if the S&P 500 moves $100, this stock will move $250. So that'll be it for today. Those are the top 5 stocks to buy for long-term growth. I'm personally invested in all 5 of these stocks. I like these stocks a lot, and I won't be touching them for 5-10 years. So this is not financial advice. This is just what I'm doing, and I hope you guys enjoy. Make sure you subscribe to the channel, like the video, and if you're a new investor and you want to just get into investing in the stock market, you guys can sign up for WeBull using the link below in the description, where you can deposit $100 and get 2 free stocks, and each of those stocks can actually be valued up to $1,600 a stock. When I put in $100, I got scammed and only got $60 back in return, but that's still a 60% return. So if you haven't done this already, it's essentially free money, so I would do it. I like free money. You can even withdraw it right away and get a 60% return. So definitely check that out. That all being said, I hope you guys enjoyed the video and have a nice day. Peace.